The information provided in this video is for educational purposes only and not intended to be used for financial or personal advice. Consult with a competent professional for guidance regarding your specific financial objectives. This life insurance video is sponsored by Tim Morton, CEO of Safe Money Monitor and Westland Financial Services. Tim and his team specialize in retirement income planning, life insurance, and long-term care. Tim will give you straight answers about the value of insurance-based strategies in the context of holistic financial planning. You may contact Tim with your questions at 800-809-6783.
Get smart with Real Money Smarts, your partner in securing your financial future. Life insurance can help provide for the people who depend on you financially if you can't be there for them. The money from a life insurance policy can be used for final expenses, to replace your lost income, cover debts, pay your mortgage, fund a child's education, and more. Life insurance can simply allow a family to continue or a business to continue should something unexpected happen to you. Dr. Patterson is a chiropractor. He just purchased a practice from a retired colleague. He has a staff of 5, a wife and 2 children, a home, and a growing nest egg of retirement savings that he manages on his own. Things are great right now, but Dr. Patterson has a lot of responsibility on his shoulders. He wants to make sure if something were to happen to him, that his family would be taken care of. He realizes he needs life insurance. But what kind? There are 2 main types of life insurance policies: term life insurance and permanent life insurance. Term life is just as it sounds. You simply buy life insurance that lasts for a set period of time or a term. It could be 10, 15, 20, 25, even 30 years. As long as you pay your premiums, your heirs will receive a lump sum payment in the event of your death during the term. If you live beyond the term, the policy expires, but you're still alive. And hopefully over the length of the policy, you've been able to accumulate more assets to provide for your family. Permanent life insurance, also called cash value life insurance, is a little different. It includes whole, universal, indexed universal, and variable universal life insurance policies. The idea behind these kinds of policies is that they don't have a set term, and as long as you pay the needed premiums, the life insurance will last as long as you do. Many policies also allow you to contribute additional money, which the insurance company sets aside in a non-taxable account and grows it at a set or a variable rate of return. In many cases, these earnings can be used to offset the premiums needed, or cash can build up, which you can borrow from your account if you need money for unexpected expenses today or to provide a tax-free income source. Let's take a look at each. Like the name implies, whole life is meant to insure you for your whole life. It has a cash value component, and in most cases, the policy premium and death benefit are fixed. With universal life, part of your premium goes into a cash account, which earns a specific interest rate and accumulates tax deferred. Universal life is more flexible in that you may be able to decrease or stop premium payments if your cash value has built up to be able to support the premium payments. Variable universal life is very similar to universal life with one important difference. You don't earn a set rate of return annually, but instead can invest the cash value of the policy in a variety of different investment sub-accounts, similar to mutual funds. The difference with indexed universal life is that the way interest is earned. It is tied to the performance of an outside index, like the S&P 500 stock market. As you might imagine, a term life policy is less expensive than the other type of policies because most people will outlive the term. The primary purpose is family or business protection. The money saved could be used to fund other kinds of investments. Dr. Patterson is an active investor who watches his money closely. In the end, he decided to go with a term life policy that would protect his family, maintain their lifestyle, and pay his obligations if he passed away. He'll invest the extra money he would have paid into a whole or universal life insurance policy in mutual funds on his own. And he'll rest easy knowing that he's protecting his family's dreams for the future. But as you can see, When it comes to life insurance, there is no one-size solution that fits everyone. That's why it's best to consult with a financial advisor or life insurance agent to help you decide what's best for you. A qualified financial advisor can provide you with a review of your financial situation and give you comparison quotes on life insurance to consider.
This video was sponsored by Safe Money Monitor. You have earned a free complimentary review of your personal situation without any obligation for further action. Let us give you the straight answers you need to make an informative decision before taking any action. You may contact Tim Morton, CEO, with your questions at 800-809-6783. Email him at asksmm@safemoneymonitor.com or visit www.safemoneymonitor.com. The information provided in this video is for educational purposes only and not intended to be used for financial or personal advice. Consult with a competent professional for guidance regarding your specific financial objectives.